the 100% commission trap and why we didn't choose that plan.
Right, we ended up choosing EXP obviously, and we're going to explain a little bit more. It looks good on paper, but then we saw how it works, and at least when I went to understand and I asked marketing, and I was understanding what it really was. And I know people can obsess about the split. 100% sounds, of course, the best, but let's talk about how you create wealth, because by creating wealth, you actually create more opportunity for yourself to create more in the future. And that's a massive difference.
Exactly. And today, really, we are going to break down the three main brokerage model and expose the hidden costs that you are not seeing on your end, and explain why the cheapest model might actually be the most expensive model and mistake for your real estate career.
And I've talked about it in the past that I used to teach economics, so I'm going to use terms like opportunity cost, leverage, assets, liabilities, revenue maybe. So I would say when we're talking about our commission splits, let's look at the entire financial picture to really understand the landscape of it. And these are the three choices basically. So the one, talk to me about the...
Exactly. The first that you have actually is those traditional split-free brokerage that you heard of. These are the big legacy names that you see all over everywhere, and you split your commission with them maybe 50-50 or maybe 70-30 in exchange for an office, a brand name, and some management support.
Now the problem with those ones is it's usually perpetual, which means it never stops, it never ends. It's every single deal you close forever. That's like renting an apartment instead of owning your own house, which is something we wouldn't tell as we sell homes all the time. So you pay your month and you're not building any equity because you're not owning it. 10 years later, you're still paying those fees to your broker, which is why a lot of people eventually leave. And then they go to the two questions, which is the 100% or the flat fee brokerage. And this is really where we're talking about.
Okay, this sounds very amazing, no? And you keep everything. That's what we were talking about. You pay a monthly desk fee or transaction fee, and the rest is yours. But here's the reality check. When you join 100% shop, then you are trading support for your cash flow. No?
So basically you have to be the general contractor for your own business. You are running everything. You have to have your own CRM. You have to have your own website. You have to have your source training. You have to constantly be looking for marketing suite and constantly be looking for every updates. Well, the commission structure is there. You're bleeding cash every single month because it's expensive to redo and upgrade and keep updated with everything. And you need to survive. And it's lonely and it's expensive because you are with other people who can't even keep up with you as well. So there's a lot of fees that you're paying that you don't necessarily have to pay. And then let's talk about what we're at, the cap model.
Exactly. And finally, the cap model commission that we were talking about, this is a hybrid model. And basically you're split your commission usually like in our brokerage EXP 80-20, but only till you hit a specific number that we call it cap, no? And for example, for EXP Realty, that is $16,000. And when you pay that cap, then 100% of your commission is going to be for you for the rest of the year, which depends on when exactly you start your business. It's not like a tax, you say January to January. For example, we started like November, and our cap is like a 1st of November.
Now, again, you want to think of this more like a mortgage. You're paying into it for a while. Eventually you own the asset, and then you're going to own all the revenue after that. And you're going to get all the updates that you possibly need. And this is where most agents stop thinking. They do a calculator, they look at their fees, and they look at the splits, and we're going to see which one is the lowest cost at the end of the day. But this is honestly not the best way. This is the wealthy agents would call this opportunity cost. So we have to talk about that opportunity cost. Do you want to explain opportunity cost, or should I? Because I'm seeing econ term.
Exactly. No, you can do it.
Okay, opportunity cost is the value of whatever you're giving up. The decision that you didn't make. This is not what you're paying, it's what you didn't get when you didn't choose that option. In any sort of business, that's what opportunity cost is. So when you choose 100% commission to save on splits, what are you giving up in exchange for that? And this is where leverage comes in.
Okay. Therefore, you basically are giving up your leverage. If you have to go out and buy your platform, which means the CRM platform like KV Core, cozy or
call it.
lofty, other independently, you're looking at the $500 to $1,800 a month. That is a massive liability for you if you want it. And if you have to pay for your own advanced training or coaching, that's thousands of dollars more even.
And let me just explain that one. I want to just jump in with something real quick. I took AI courses like crazy a few months ago. I didn't pay anything for these AI courses. I just wanted to stay ahead of the game so I understood what was coming down the pipeline. So this is just something you would be giving up if you choose something that is not 100%.
Exactly. And this is why we need to talk about the concept of the asset versus liability that my wife is going to probably more talk about.
I wanted to talk about wealth building on its own, right? So I hope you read Rich Dad, Poor Dad. You can have an opinion on it politically, but really understanding what is an asset and what puts money back in your pocket and what is a liability where you take money out of your pocket. In the flat fee model, technology is a liability. Office fee is a liability. You're paying them and it's completely gone after that. Your education is also a liability because you have to stay updated, because if you don't stay updated, you're going to fall behind. So your money comes out of your pocket and it's gone. But in an EXP like we have, the cap isn't just a fee, it's the price of admission. You're getting the systems, you're getting the office, you're getting support, you're getting that education. So I would really like to talk a little bit more about EXP and what you're getting for the $16,000.
Exactly. Therefore, we're going to look at that model that we were talking about, cap model for the EXP $16,000. First, if you buy your leverage, you get the enterprise version of the KV Core, which we're talking about CRM. Of course, we have actually 3 different choice of the CRM.
We use Bulltrail.
And the training and the support is also included at everything they do. If you try to build that tech and stack yourself, you will spend more than actually the cap. That's a lot of headache to manage that.
Now, if you're a successful agent and you are completely you have done enough deals to where you get that, you hit the $16,000 and then you go 20 more deals, or there's a faster way if you have in a more expensive area. I don't really know about it. Then once you get that $16,000 back, you are going to earn it back you're going to earn the money back in stock, which is great. So you're not really losing money as long as you are producing. So even though you get the cap, it goes $250, and then that will go away after a certain amount of times, after 20. But if you are also an Icon agent, you're going to get the entire $16,000 back in stock, because now you are a company owner, which means you're not a worker at this company, you're a shareholder. What can you do with this? How about put it into your retirement funds? Because you don't have to keep it as EXP stock. I wouldn't recommend that. Do whatever you want with it, but you have stock awards that are coming to you. You can do whatever you want. And how did you get this? From selling houses. So all you're doing is getting your money back in stock, which is an amazing thing about that. And I want you to put it in your head. The money is shifted because it's like how we tell people when buying a mortgage versus renting. Because when you're renting, you're paying someone else's mortgage. When you are an owner, you're paying the walls of your house, and eventually it's going to be yours. So you're getting the cap back. It's not gone. It's converted into a different asset. So you're investing into the company. You're getting the education. You're getting the Bold Trail. You're getting whatever CRM of choice you can do. You're picking of the 3. We chose Bold Trail. And then you're also getting your stock back, which is an amazing thing.
Exactly. And third, we're talking about revenue. Sure,
right. Another way to make money.
And when you help the company to grow by attracting productive agents, you actually receive a portion of revenue that generated by their sale. And this is not the money that coming out of the pocket. It's coming from the company dollar, because in EXP we have that 20-80 model,
80-20.
And that 10% of that 20% of the EXP that you're paying as a commission actually help you to go to this revenue share.
And now this becomes a passive income. And basically you want to think about it. You don't have to do a bunch of videos on it. You tell one person, they ask you, how is it life at this company? You're going to say, I like it. And then and if they choose you, then that's really the end. Now you create a passive income stream of just telling somebody that you like the company that you work at. If you get sick, you get a vacation, you have enough people there where you can actually will it to your children. That's an all amazing thing. So continue to pay you. And it's also a retirement plan. So say you start finding 12 agents a year every single year, you're creating your retirement fund as well. So you need to stop thinking like a salesperson only and just selling our houses, which of course we all love to do, but we also have to think about our future and then the business owner and building wealth. So if you start looking at the 100%, you're going to be selling houses forever. But that's really what you're going to get at the end of the day. You need plus probably paying $20,000. Do you want to talk about that?
No, you can talk about it.
Yes, I just talk a lot with this because I get so passionate about it. So $20,000 probably in tech, education, tools, fees, and you have zero assets at the end of the month. So this is a negative return on investment.
Exactly. And if you go into basically to the traditional broker and you pay 30% forever and you have a brand but you have no ownership and no exit strategy, that is also a perpetual rent that we were talking about. And if you choose the EXP cap model, or like a EXP that we were talking about, you pay the cap amount, but the amount unlocks the stock award, of course, in EXP Realty, and revenue share, and massive technology leverage. And the potential ROI or return on investment is positive this time because you're acquiring asset and not just paying bills.
So we need to start stopping asking ourselves, what is the cheapest option? Because, somebody once told me, I don't buy cheap things. I'm too poor to buy cheap things. And that's really the question here. What is the cheapest offer versus where can you build the most wealth? Because honestly, we have to start thinking about our future and what is best for us in the future.
Exactly.
Instead of buying the cheapest thing that you're going to toss away and have to buy again and again and again and again, that's not actually the best idea. We want to make sure that we're stopping by these liabilities and we're accumulating at least things that we can keep, or we're even better building assets. So we need to move our mindset.
Exactly. And if you're ready to stop renting your career and business and start owning your future, we need to look at the numbers. We need to do a real prosperity calculation for you, for your specific goal in your business, and check the details below in this video description. Let's sit down and look at your production and see what exactly your net income is and what is your goal for the 5 or 10 years from now.
Because the best answer is let's do the math.